Ladies and gentlemen, welcome back to Fibonacci's Trader. I hope you're managing to stay positive despite the challenging red market. Palantir has seen a sharp pullback alongside Nvidia retreating from its all-time highs. The broader market is also facing significant declines following strong macroeconomic data. While this data signals economic strength, it has sparked concerns about monetary policy, leading to negative reactions in the stock market. We'll unpack what this means for Palantir, the broader market, and some key macroeconomic indicators in just a moment. Kramer suggested that the stock might rally after its recent pullback, even tweeting about it at 3:30 a.m. While Palantir initially appeared to make a move in pre-market trading, it quickly fell back into a slump. As of now, Palantir is trading at $69, down approximately 7 to 8.5% when factoring in after-hours trading. This marks the stock's steepest pullback since August 2024. Adding to this pressure, Cathie Wood's ARK Invest recently sold over $15 million worth of Palantir shares, totaling more than 200,000 shares from various ETFs. This significant unloading comes at a time when broader concerns about high valuations are weighing on growth stocks. Despite Palantir's meteoric rise throughout 2024, analysts and investors are becoming increasingly cautious about its valuation. Morgan Stanley, for instance, recently assumed coverage of Palantir with an underweight rating and a price target of $60, a sharp contrast to its current price in the $70 range. The question many investors are asking is whether this pullback reflects a deeper issue with Palantir or if it's merely a symptom of broader market conditions. Fundamentally, nothing has changed within the company itself. Palantir continues to maintain its position as a leader in data analytics and artificial intelligence, with strong contracts and partnerships that solidify its growth prospects. However, the stock has been heavily impacted by macroeconomic factors and broader trends affecting high-growth, high-valuation stocks. With a market cap hovering around $159 billion, Palantir's valuation has been under scrutiny for some time. Critics argue that the stock's rapid climb in 2024 was driven more by market momentum and hype around AI than by fundamental changes in its business. As a result, these macro-driven pullbacks may represent a normalization of its valuation rather than a fundamental flaw in the company's prospects. For long-term investors, Palantir's pullback might present an opportunity. The stock, which was recently trading in the $80 range, is now $10 cheaper. Investors with a longer time horizon might view this correction as a chance to buy into a company that remains at the forefront of AI and data technology. However, it's crucial to remember that Palantir's short-term price action may remain volatile, especially as the broader market reacts to ongoing macroeconomic challenges. The current $70 support level will be a critical area to watch. If Palantir fails to hold this level, it could move into the $60 range, where Morgan Stanley's price target lies. However, there's decent support in the mid-60s that could provide a floor for the stock, even if further selling pressure emerges. The recent JOLTS report revealed that unfilled U.S. jobs spiked to over 8 million in November, far exceeding expectations. This data underscores the resilience of the U.S. economy, but has complicated the Federal Reserve's plans for monetary easing. The report pushed the 10-year Treasury yield up by 4 basis points to 4.7%, signaling that interest rate cuts in 2025 may not occur as the market had hoped. For Palantir, this news is a double-edged sword. While strong economic data suggests robust demand for technology and data analytics services, the prospect of higher for longer interest rates makes high-valuation growth stocks like Palantir less attractive. Investors looking for safer returns may pivot to bonds or more stable equities, adding further downward pressure to growth stocks. ARK Invest's decision to sell Palantir shares has sparked concerns among retail investors. While Cathie Wood remains a vocal proponent of disruptive innovation, her recent moves suggest caution regarding Palantir's short-term prospects. The broader bearish sentiment surrounding Palantir was amplified by Seeking Alpha's report highlighting ARK Invest's $15 million sell-off. This type of news can create a snowball effect, prompting other investors to reassess their positions in the stock. Despite this, it's worth noting that ARK's sale likely reflects portfolio rebalancing rather than a lack of confidence in Palantir's long-term potential. For long-term investors, these sell-offs may represent a buying opportunity, especially if the stock stabilizes around its support levels. Palantir's current pullback reflects broader market challenges rather than specific weaknesses in the company. The stock's high valuation, combined with macroeconomic uncertainty, has created a perfect storm for short-term volatility. However, for investors with a long-term perspective, this correction could be a chance to accumulate shares in a company poised to benefit from the ongoing AI and data revolution. The key question now is whether Palantir can hold the $70 support level or if it will dip into the $60 range. While the bearish sentiment is strong, the fundamentals of Palantir's business remain intact. Long-term investors should focus on the company's growth story and ignore the noise of short-term price fluctuations. In other news, NVIDIA's weight on the market contributed to a Nasdaq decline of 1.9%. NVIDIA shares have dropped to the 140s after reaching record highs of $153. At CES, NVIDIA unveiled its RTX 50 series GPUs and announced partnerships, such as one with Toyota, to bring AI to engines. Analysts remain bullish, with price targets in the $180–$190 range, suggesting potential entry points for long-term investors. Lastly, smaller cap stocks like SoFi and IWM are also seeing declines. SoFi dropped below $16, while IWM is consolidating in the $218–$226 range. For Palantir, the key question remains, will it hold the $70 support level or dip into the 60s? If the latter happens, there's some support in the mid-60s that could stabilize the stock. Share your predictions in the comments. Stay calm, keep your emotions in check, and have a great trading day.